So it's Monday's open trading day, and this is 8:30. Using the 2022 mentorship, opening price was somewhere around, I don't know, I can't see my time annotation, somewhere around here. This was the drawn buy side liquidity. This was the sell side liquidity before 8:30, the first swing low. That's where we opened, and the buy side liquidity. I don't know, I can't see my time chart. Now you have a time chart. That's the judo swing before 8:30. We are below opening price at, let me just toggle it right here, at noon, midnight. That was a drawn buy side, that was a drawn sell side. A little bit of a move here, but we don't trade before 8:30. So 8:30, that's the judo swing that takes out people who have trailed their stop loss going long, all the way up to 9:30. Then 9:30 the real move starts, where this swing high was broken. This swing high was broken right here, created a fair value gap right here, traded into it. Your loss should be at the low end of that fair value gap, but if you're really scared, you should really put it at the last swing low of that move to be safe, because there's a very high likelihood that you'll get stopped out, as I've seen in many of my trades. So this is the S&P, so the risk would have been 7 pips. We're aiming for this liquidity, this buy side liquidity as our first partial. These relative equal highs, you can see them, that and that. This high has already been taken, the morning high, the 8:30 high, as anticipated, obviously. A lot of choppy price consolidation, but this is where the trade was at. And we're waiting for 12. When you look at the Nasdaq has already fulfilled what we wanted. Ignore this. This might have been the day you took a loss anyway. With clean charts, you can see there's a lot of imbalances in the 3-minute time frame, which is exactly what I'm targeting. And as you can see, most of it has already touched that 50% using a fib. If you were to annotate this using a fib, 50% of this imbalance would be right there. Just about there. So if you can get that, obviously hunting for a setup in this time frame would be there was no setup in the Nasdaq, but this swing high was broken. There was no setup in the Nasdaq in the 3-minute, but there was one in the S&P, and sometimes that you should use SMT diversions to enter a trade. But also this isn't sufficient enough for me to enter this trade. Someone would have taken that as your entry. It wouldn't have been bad, but that for me wouldn't have been significant enough. And at this point you're probably out because you've got 78 pips. Most of the buy side has already been taken anyway, so you'd have already taken partials. I haven't traded today though. That would have been this would have been the drawn buy side, but also aiming for a rebalance of this. And then looking at the daily time frame, I'm majorly bearish. Why? Because using this bias, we can see there's very little down close candles, which means this is an up close. It is a, what do we call it, it's bullish, because the order blocks are being respected except for these order blocks. But as you can see, traded back up. This might be the order block, so I'm waiting. There is no real imbalance right here in the lower time frame, so don't be distracted by that. I've checked it. Most of the rebalances have already occurred. We seem to be in an uptrend, so don't go against the bias unless proven otherwise. So today I will be targeting probably I think I'd just probably watch if I was, because this is very decisive. It could go either way. It could go for the previous day high or the previous day low. But for that is intra external day range liquidity. But for intraday range liquidity, that would have been my setup, aiming for a rebalance of this imbalance right here, which as you can see has already happened anyway, just as it was speaking. So yeah, that would have been my analysis for today. But this is not trade advice, it's just an analysis of what I've seen using the 2022 mentorship. Okay, so have a nice day wherever you are, and see you tomorrow.